A currency pair is the quotation and pricing structure of two different currencies, where one currency is quoted against the other. In the Forex market, currencies are traded in pairs, and these pairs are represented by a three-letter code, where the first two letters represent the country code, and the third letter represents the currency code. For example, the currency pair USD-JPY represents the US dollar against the Japanese yen. There are three major types of currency pairs: major, minor, and exotic currency pairs. Major currency pairs are the most traded currency pairs in the Forex market, and they account for more than 80% of the total trading volume. These pairs are made up of the currencies of the world's most developed economies, such as the United States, the European Union, Japan, the United Kingdom, Canada, Switzerland, and Australia. The major currency pairs include EU USD, Euro US dollar, USD JPY, US dollar Japanese yen, GBP USD, Great Britain pound US dollar, USD CHF, US dollar Swiss franc, USD CAD, US dollar Canadian dollar, AUD USD, Australian dollar US dollar, NZD USD, New Zealand dollar US dollar. These currency pairs have the most liquidity and are the most actively traded in the Forex market. They are also the most stable, as they are influenced by the economic and political developments of the countries that issue the currencies. The US dollar is involved in the majority of the major currency pairs, making it the most traded currency in the world. Minor currency pairs. Minor currency pairs are also known as cross-currency pairs or simply crosses. They are the pairs that do not include the US dollar and are traded less frequently than the major currency pairs. These pairs include the currencies of the developed economies, such as Europe, Australia, Canada, and Japan. Examples of minor currency pairs include Euro GBP, Euro Great Britain pound, Euro JPY, Euro Japanese yen, GBP JPY, Great Britain pound Japanese yen, AUD CAD, Australian dollar Canadian dollar, CAD JPY, Canadian dollar Japanese yen. Minor currency pairs are often more volatile than the major currency pairs, as they are influenced by the economic and political developments of the countries that issue the currencies. They are also subject to wider bid-ask spreads, which means that the cost of trading these pairs can be higher. Exotic currency pairs. Exotic currency pairs are the currency pairs that include the currencies of the emerging market economies, such as Brazil, Russia, India, and China. They are also known as the high-risk forwards high-reward pairs, as they are often more volatile and less liquid than the major and minor currency pairs. Examples of exotic currency pairs include USD ZAR, US dollar South African rand, USD BRL, US dollar Brazilian real, USD RUB, US dollar Russian ruble, USD INR, US dollar Indian rupee, USD CNH, US dollar Chinese yuan. Exotic currency pairs are often subject to wider bid-ask spreads and higher trading costs, making them more expensive to trade than the major and minor currency pairs. They are also more sensitive to the economic and political developments of the countries that issue the currencies, and can be influenced by a range of factors, such as interest rates, political instability, and commodity prices. Factors that affect currency pairs. There are several factors that can affect the value of a currency pair in the Forex market.